Hello and welcome to the 10-minute property tips brought to you by the EDPF Property Academy. Today, we will be guiding you through the essential aspects of due diligence in property investment, specifically focusing on South Africa. Let's delve into this critical process that underpins successful property investment strategies. Due diligence in property investment refers to the thorough investigation and analysis conducted before making an investment decision. It encompasses examining various aspects such as legal, financial, physical, regulatory, and environmental factors to assess the property's risks and potential. For instance, in South Africa, due diligence may include investigating historical land use, potential land claims, and compliance with the broad-based Black Economic Empowerment Act, the Spatial Planning and Land Use Management Act, Deeds Registries Act, Alienation of Land Act, Occupational Health and Safety Act, and much more. Our primary goals in due diligence are fourfold. Firstly, we aim to identify and mitigate risks associated with the investment. Secondly, we seek to verify the accuracy of property information to make informed decisions. Thirdly, we ensure compliance with regulations governing property ownership and development. And finally, we assess the feasibility of the investment in terms of its financial returns and market dynamics. Before delving into specifics, we conduct an initial assessment of the property. This involves gathering information about its location, market trends, and potential demand. For instance, properties in Cape Town's prime locations may offer higher rental yields due to increased demand from tourists. Legal due diligence is paramount. We meticulously examine property ownership, title deeds, and any legal encumbrances or disputes. In South Africa, title deeds play a pivotal role in establishing ownership rights, and verifying their authenticity is paramount to avoid conflicts. Financial due diligence entails analyzing the property's financial records to assess its income, expenses, and cash flow. By employing various valuation methods, we can determine the property's value and evaluate its potential returns. This analysis forms the basis for our investment decision-making process. Physical due diligence involves inspecting the property's condition, including its structural integrity and maintenance needs. Qualified inspectors help us identify any defects or issues that may affect the property's value or require repairs. A comprehensive physical inspection is crucial to understanding the property's true condition. Regulatory due diligence focuses on compliance with zoning regulations, building codes, and permits. Understanding these regulations is vital to avoid fines, delays, or legal complications. By conducting thorough regulatory due diligence, we ensure our investment aligns with legal requirements and standards. Lastly, environmental due diligence evaluates potential environmental risks associated with the property. This includes assessing contamination, hazardous materials, and compliance with environmental regulations. Identifying and addressing these risks is essential to safeguarding both the environment and our investment. In conclusion, due diligence is a meticulous process that forms the foundation of successful property investment in South Africa. By thoroughly examining legal, financial, physical, regulatory, and environmental factors, we can mitigate risks, verify information, and make informed investment decisions. Okay, so let's talk about the process to follow and documentation required when you want to do a due diligence before finalizing the purchase of your investment property. The most important check is to ensure that the property is registered in the name of the seller. For this, you will need to inspect the title deed. What is a title deed and what does the title deed include? Firstly, it includes a description of the property, with its size, boundaries, and exact position. Secondly, the name and identity number of the person or persons who legally own the property. Oh yes, it is possible for more than one owner to be listed on a title deed. Next will be the date when the property was last transferred and, if bought from another person, the purchase price. Furthermore, it will include any factors that could restrict the sale of the property, for example, a home loan, any restriction that applies to the purchase of the property. For example, the title deed should state if the property has a full freehold title. The title deed will also have an official deeds registry office seal to indicate that the deed has been recorded in the name of the owner and the date. After confirming ownership, your next step is to confirm that the building complies with the Surveyor General's diagrams, zoning certificates, and approved building plans. You may need an architect and maybe even a town planner to verify this information. In confirming the financial data in your due diligence, your first port of call is the rent roll. This document shows the rental income received from tenants as well as any other income derived by the property. You should confirm that the rent roll agrees to the financial statements, management reports, and future budgets. Next, you should get the financial statements, management accounts, and budgets as well as all the expense invoices to verify the expenses listed in these reports. Actual tenant statements for 12 months including recoveries and proof of payments by tenants to confirm that they are up to date with monthly payments are critical to ensure tenants pay on time. Ensure that you have copies of all the latest tenant statements and agree these to the lease agreements. Insist on the arrears schedule to see if there are any delinquent tenants. Ensure that the seller gives you copies of all the leases and agree these to the tenant statements and rent roll. Confirm that you have copies of all expense invoices and agree them to the schedule of expenses in your financial statements. Ensure that you have copies of all municipal invoices and that, again, they agree to the schedule of expenses. Also ensure that you have copies of the latest meter readings and that they agree to tenant statements. From a legal perspective, you will require copies of all contracts, including lease agreements, service level agreements, and maintenance contracts. Check if the seller has committed to any guarantees, warranties, or indemnities that may affect the transaction and seek legal guidance on how to mitigate any risks related to these. Finally, you will require the occupancy certificate and, where applicable, structural and civil engineering certificates to ensure that the property is legally occupied. If you do not have the technical skill, you will require an independent review of all relevant technical information such as a structural engineer's report, electrical engineer's report, facilities review, electrical reticulation, standby generator, plumbing reticulation, emergency water supply, security systems, air conditioning, electric fencing, beetle report, roof report, and any other structural aspects of the property to ensure that the property is in a sound condition. Finally, let's consider some of the pitfalls when one neglects to do a proper due diligence. First off, the lack of thoroughness in a due diligence may result in the investor missing critical factors such as who actually owns the property. Oftentimes, buyers have paid over monies to a so-called seller only to discover that the property belongs to someone else. This will result in the loss of your money. Secondly, if you do not thoroughly investigate the financial viability of the investment, you may end up with a property that does not comply with your investment goals and lead to negative cash flows and financial losses. If one does not test for structural damage, electrical, plumbing, sewer, and other defects, you may end up spending additional money to ready the property for your tenant, which, again, could lead to the investment not being financially viable. Again, if you do not ensure that the property has been cleared from an environmental aspect, you may end up having to deal with the Department of Environmental Affairs with issues such as asbestos removal or rare fauna and flora, or the Heritage Department with regard to heritage-related matters. Failure to consider the long-term implications of these critical due diligence processes will lead to an investment that will certainly have financial ramifications which will impact your cash flow in the long run. Finally, we would certainly recommend that you employ the services of professionals and technology to help you in this process to ensure a thorough investigation of the investment opportunity.
Thank you for being part of the EDPF Academy #1 Million Title Deeds project. We hope you will continue your journey to property ownership with us by registering for our Academy course at www.edpfacademy.app or visit our main site at www.edpf.co.ca for more information about EDPF.